Hello, good morning to all and happy Friday. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning and happy Friday. Today is the 6th of October. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, so leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exist deposit. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so right now, as usual, this will be our three key takeaways for our daily dose of market insights. Will be a recap of key highlights and events that took shape yesterday. What are the next key data events to look out for, to watch out for, and as well as short-term technical analysis outlook on the various asset classes that has interesting configuration. So without further ado, let's take a recap of what happened yesterday. So yesterday, what you could see over here is that the dollar strength continued to pull back for the second consecutive session. So did actually lead to a fall in the US Treasury yield, right below a key resistance at 4.9%. And oil prices continue to actually drop within our expectation when the WTI crude oil, which is the West Texas oil in our platform, went down below $83 per barrel. Okay, so where we head next, potentially we will share you in the short-term technical outlook later. That also gold prices going to stabilize, the XAU/USD going to stabilize at the 1810 support level. So with that, let's talk about the US stock market first. All right. So for the US stock market, let me hide my screen. Let me show my screen. Pardon me. Okay, give a minute. Yeah, I think it's a bit slow right now. Yeah, it should flash out now. All right. Okay, so let's focus more on the screen instead. Okay, so I could see over here, this is the heat map of the S&P 500 yesterday. So pretty much of a mixed picture, but for sure what I could see over here is that there are several pockets in the 7 mega cap, where NVIDIA closed up by 1.5% almost, Apple 0.72%, Tesla down negative 4.2%, Amazon negative 0.82%, and slightly negative about 0.2% for Google and Meta. So that actually give a bit of a consolidation towards the end of the market. Why? Because at the start of the US stock market, the benchmark indices actually has an intraday loss of almost 0.8% to negative 1% on the Nasdaq 100. But after towards the second half of the US session, all the US major stock benchmark indices managed to close near the high of that session. So that is kind of a relatively positive in terms of the trading range. So initially, it actually kind of a gap down at the start of the US session with losses of negative 8% to negative 1%. But towards the trading session, some signs of positive what we call upside pressure managed to actually allow it to float up towards the near the session high. Okay, so overall the S&P managed to reduce its intraday losses to close at negative 0.13%, the Nasdaq 100 negative 0.36%, the Dow Jones almost unchanged, negative 0.03%, and the Russell 2000 at positive managed to inch out a slight gain at positive 1.4%. So all in all, right, what we could see the intermarket correlation over here is that as long as potentially there we could start to see further USD strength setback, which actually lead to a fall in the US 10-year Treasury yield, that actually add a bit of what I call consolidation or short-term kind of a corrective rebound to actually address or to actually see a bit of retracement in the last 4 weeks of decline in the benchmark US stock indices. All right. So with that, right, since we know that the US 10-year Treasury yield is pretty much important for the fate of the US benchmark stock indices, let's quickly, right, dive into the US the 10-year benchmark for the US. Okay, so over here, right, what you could see this is the US 10-year benchmark. So right at the 4.9% retracement level, resistance level, 4.9% retracement level. So what I could see over here is that you start to see a bit of consolidation on the US 10-year Treasury yield. So if we start to continue to inch downwards, right, towards the 20-day moving average, I think as a support at around 4.4%, 4.5%, and followed by the 50-day moving average that is coming at 4.3% between this zone. If you're going to pull back within this zone, within a medium term and major uptrend, that could start to see a bit of what I call further reinforcement of that potential short-term counter-trend rebound for the benchmark US stock indices. Something to keep the close eye watch for on the US 10-year rate that has been pretty much of an important driver in the performance of the US benchmark indices. All right. So now, without further ado, right, let's look at what are the economic data to look out for. So what I could see before we start over here is that yesterday was pretty much of a very light economic data release, so no much of an important economic data releases yesterday and event. So what happened actually took shape earlier this morning is household spending. So household spending in Japan managed to beat expectation month on month at 3.9%, surpassed the previous month of negative 2.7%, and above expectation of 0.9%. So even on year, even though it's still negative 2.5%, but it managed to actually close the gap of last month's July negative figure, means the downside momentum start to reduce on a year-on-year basis from negative 5% in July, and also beat expectation of negative 4.3%. So i.e. what does it mean in Japan? So Japan consumer confidence starts to be on the uptick. Why? Because they continue to start the spending habits start to tick up. So spending habits start to tick up, meaning that there is a higher chance for Japan inflationary rate year on year to maintain above that 2% level that was set by BOJ target in the last 12 months. So in the last 12 months, inflation rate has been beating BOJ target of above 2%. So with that, higher uptick in household spending indirectly implies that there is a lower chance that Japan will slip back into deflationary pressure. What does it imply on the FX market? For sure, BOJ may be forced to actually start to bring forward their policy normalization. That means we talk about their negative interest rate policy at least into the first half of next year potentially. And also based on this latest set of key economic data, which is on the positive side of the Japan, there's actually a news flow right to up this morning, is that this ex-BOJ governor, Kozo Moma, he actually stated that there's a possibility that BOJ will consider another yield curve guidance tweak later at the end of towards the end of this month in the next upcoming BOJ meeting. So that could actually put a bit of pressure on the dollar yen rate as well. All right. So now with that, what other key economic data to look out for today? For sure will be the US non-farm payroll data that is out later at 8:30 p.m. Singapore. Yeah, 8:30 p.m. Singapore time. Non-farm payroll data. So expectation is to have a slight dip below 170K from 186K added in the month of August. So if this came in with expectation, is about 4 consecutive months of below 200K increase. So as long as this number is not too hot, if we start to go above 200K, so this is where the risk of the US 10-year Treasury yield will start to spike up again, meaning that the job market is pretty much robust. There's a higher chance for the US Federal Reserve to maintain rates at a higher level for a longer period of time. So another key data to look out for at the same time will be Canada jobs data. They call it employment change. That's up at 8:30 p.m. Same time. Okay, same time as the release of the US non-farm payroll data. Okay, so that's the key economic data and events to look out for today. Now let's jump on to the short-term technical outlook on the various asset class on the share. So let's start with the FX market first. So for the FX market, what you see over here is that this is the rolling 1 month performance as of today right now. Yes, within the expectation, the US dollar strength pullback continue to materialize across the board. And what we could see over here is that the previous dollar strength that is more prevalent against the European currency has now starts to cover the gap, where you start to see further dollar weakness yesterday against the sterling, against the Swiss, and against the euro dollar. Okay, so with that, now let's look at the technical chart of the sterling and the euro dollar over here. Okay, let me start with the, one second, let me go to the chart. Okay, so let me start with the sterling dollar first. So sterling against the dollar, yesterday we have a short-term resistance level at 1.2180. We do have a short-term counter trend rebound scenario, which is i.e. a short-term bullish bias condition for the sterling dollar. 1.2180 has been met over here. So now it seems to me that potentially is looking to test the next resistance level at this 1.2270, which is the swing high area of 29th of September, confluencing with the minor congestion area of 22 of September and 23rd of September, and as well as this downward 20-day moving average. So all in all, right, potentially we could start to see the further extension of this ongoing short-term counter trend rebound on the sterling dollar. So I'll be using yesterday, close to yesterday's swing low area at 1.21 figure level. So it's a tighten key short-term pivotal support for today to maintain this potential short-term counter trend rebound scenario towards the next resistance at 1.2270. But however, if we start to see a breakdown below 121 figure on this tighten key short-term pivotal support on the sterling dollar, then this short-term counter trend rebound scenario will be invalidated to see the continuation of this impulsive down move of this short to medium term downtrend of the sterling dollar towards 125.50. Below it exposes the next support at 119.60. All right, very quickly, the euro dollar. So on the euro dollar, similar configuration as the sterling dollar. So yesterday it almost hit the 1.0560 key short-term resistance level that we highlighted, going to inch upwards. So we would actually maintain that potential short-term counter trend rebound scenario for the euro dollar as well, with a tighten key short-term pivotal support at 1.0490, which is close to yesterday's swing low area. Above 1.050, above 1.0560 exposes the next resistance at 1.060, which confluences with the downward sloping 20-day moving average. So all in all, still maintaining that potential short-term counter trend rebound scenario on the euro dollar, holding above a tightened key short-term pivotal support at 1.0490. However, if we start to see an hourly close below 1.0490, then this counter trend rebound scenario will be invalidated to see the continuation of this bearish impulsive down move within its short to medium term downtrend of the euro dollar to retest 1.0450, followed by the next support level in first step at 1.0420 on the euro dollar. So one more interesting pair of highlight over is the dollar CAD. So what's interesting of the dollar CAD, that previous squeeze up from last Friday has come close to a key medium term resistance at 134.40. So what's 134.40? Very quickly, I go to the daily chart over here. So what you will see that 134.40 is the daily what you call it, complex range resistance that is in place since 13th of October. CAD previous up move on 10th of March, and right now it's actually testing at this level at 4th of October swing high, which is yesterday. And if you go down to the daily hourly chart, what's interesting over here is that the momentum has starts to be on the negative side as well. What you could see that the hourly RSI starts to flash a very clear bearish divergence right at the overbought zone, indicating to us that this squeeze up over here has started to lose its upside momentum. So with that, we have actually some signs of key technical elements indicate to us that this squeeze out over here is showing signs of a short-term bullish exhaustion. So we'll be having a short-term bearish bias condition over here to play a potential short-term bearish reversal scenario, holding below the 1.3440 key short-term pivotal resistance. A break below 136.95 intermediate near-term support will increase the odds of this short-term bearish reversal scenario to test the next support level at 136.10, slightly above the 20-day moving average. However, if we start to see a clearance above 134.40 with an hourly close above it, then this short-term bearish reversal scenario will be invalidated to see a further squeeze up to test the next resistance level at 1.3480, a 138.8, pardon me, is 138.80 level. So what's 138.80 level? If you go to the daily chart, is in fact the swing high area, the medium term swing high area of this 13th of October over here. All right, so that's for the dollar CAD scenario. As long as 134.40 key pivotal resistance holds potential for a short-term bearish reversal scenario on the dollar CAD. Now, very quickly, lastly will be the dollar yen. So on the dollar yen over here, okay, give me a minute, let me save it. Okay, so for the on the dollar yen, it continues to actually inch down much lower. Okay, a series of lower high we could see yesterday, but continue to remain supported. So this morning it retest again at during yesterday US session, it retest again at this key 20-day moving average and managed to bounce off it. Early this morning, it tried to attempt to test and try to trade sideways. So for sure, this is a very key downside potential trigger level for any potential further weakness on the dollar yen on the shorter term chart. So I do not want to tighten the key short term pivotal resistance to so tight to this 14940 level. So I will still maintain it at 150.30 level. Only a clear break below this 14825, at least an hourly close below 14825, then we would actually tighten the pivotal resistance to 14940. So still maintaining that potential short-term bearish bias on the dollar yen. Break below 14825, hourly close below 14825 will increase the odds of this short-term potential downward movement on the dollar yen towards the next support at 14610/146 figure level. But however, if we start to see a squeeze up above 150.30, then potentially we will start to see the continuation of this pretty much sticky uptrend movement towards the upper limit of the major resistance zone at 1490, followed by the 21st of October last year, 21st of October 2022 swing high at 151.95. Okay, a bit of tongue twisting. Pardon me, it's 151.95. Then the next resistance, then after that this will be the 150.90 resistance. All right, a break above it exposes 151.95. Okay, so that's for the FX market. Very quickly, indices. So the indices continue to show signs of a counter trend short-term rebound. The Hang Seng Index or the Hong Kong 33 push up within our expectation, now coming close to this key that short-term resistance that we highlighted yesterday at 17,680, which is also confluencing with the 20-day moving average, and as well as this minor descending trendline resistance that is in place since 4th of September high. So yes, it's overbought, but there is no bearish divergence on the overbought level on the hourly chart. So I could still maintain that short-term bullish bias condition for today on the Hong Kong 33 index. So, but I will keep it a tightened key short-term pivotal resistance, which is this former minor range support turns into a pullback resistance right now. A pullback former minor range resistance turns into a pullback support. Pardon me for my tongue twisting, at 17,310 level. So a tightened key short-term pivotal support at 17,310 level to maintain that short-term bullish bias condition. A break above 17,680 exposes the next resistance, which is the minor swing high area of last Friday at 17,910. But however, if we see an hourly close below or a breakdown with an hourly close below 17,310, then this short-term bullish bias condition will be invalidated to see a retest at last Wednesday swing low area at 17,060. A breakdown below it exposes the next support level at 16,800. Okay, now on the German 30 index, no change yesterday. The prices traded sideways, but holding above our key short-term pivotal support level at 14,930. So as long as this short-term key pivotal support at 14,930 holds, maintain that potential short-term bullish bias condition towards the next resistance level for this counter trend, potential short-term counter trend signal to place out to test the resistance at 15,290/15,330. However, if we start to see a breakdown below 14,930, so why 14,930 is important to recap, is actually the lower boundary of this key medium-term ascending channel that is in place since 31st of July high. All right, and the RSI going to actually shape higher low as well. Okay, indicating to us that there's still some signs of upside momentum that is we call it exhibiting in the short term for the dollar, for the German 30 index. Okay, only a break below a clear break for hourly close below 14,930, then this short-term counter trend rebound scenario will be invalidated to see the continuation of the impulsive down move of its short and medium-term downtrend towards the next support level at 14,630 for the German 30. Okay, very quickly, the US stock indices. So on the US stock indices, let's start with Dow Jones first, the Wall Street 30. So very interesting, very similar configuration like the German 30. Managed to hold above the short-term pivotal support level at 32,800 level, going to actually shape higher low. So no change. We're still maintaining that short-term counter trend scenario to test the next resistance, to test the intermediate resistance at 32,270. Above it, sees the next resistance coming in at 33,510. However, if we start to see a breakdown of the hourly close below 32,800, then this short-term bullish counter trend rebound scenario will be invalidated to see the continuation of the impulsive down move towards the lower boundary of to test the lower boundary of this short-term descending channel that is in place since 21st of September with the support level coming in at 32,570. That's for the Dow Jones Industrial Average or the US Wall Street 30. Lastly, Nasdaq 100. Okay, so for the Nasdaq 100, it's going to consolidate right below the 14,900 we call it key range resistance level that is in place since last Friday, but managed to shape a higher low yesterday. So for sure, we do not want to have a very tight key pivotal resistance towards this level over here, but still maintaining at this Wednesday swing low area at 14,450 level. So as long as 14,450 level still holds, potentially this short-term counter trend rebound scenario could still place out to see a retest at 14,900. A breakout above it exposes the next resistance at 14,980, which is also the 20-day moving average. But however, if we start to see hourly close or breakdown, hourly close and a breakdown below 14,450, then this short-term counter trend rebound scenario will be invalidated to see a continuation of this impulsive down move of the short to medium term downtrend of the US Nasdaq 100 to test the next support level at 14,245. All right, so that's pretty much sum up for the major benchmark US stock indices. So lastly, let's quickly take a look at WTI crude oil, which is the West Texas oil we call it our platform. So yesterday we do have the price broke down below the 50-day moving average, broke the psychological level at 83 mark, and now coming very close to the short-term level, short-term support zone that we highlighted yesterday at 8210/8120. So what's interesting over here is that the hourly RSI has started to shape a bullish divergence scenario right at the oversold region, indicating to us that this steep down move from the 28th of September all the way up to yesterday's swing low is a bit overstretched on the downside. So there's actually a there's actually an increased odds of a potential short-term counter trend rebound scenario taking shape, given that the bullish divergence condition that is being flashed on the hourly RSI. So with that, I'll be using 8120 as a key short-term pivotal support for today for that potential short-term counter trend rebound scenario to play up to at least retest the 50-day moving average, now acting as a resistance, also confluencing with yesterday's swing high area at 8510 level. All right, but however, if we start to see a continuation of a push down and a hourly close below 8120, then this we call it a short-term impulsive down move sequence from the high of 28th of September should potentially resume to test the next support level at 7885. So what 7885 is this? Okay, look, okay, is this a swing low area of 3rd of August, 22nd of August, and as well as 24th of August, all right, and also very close to the 200-day moving average as well. All right, so with that, that pretty much sum up for today's daily dose of market insights for Friday. So I wish you all a happy Friday and a great weekend ahead, and we shall speak again on next Monday. Thank you.